Thank you for joining us and welcome to the department's workshop examining catastrophe modeling and insurance. Our first speaker will be Bryan Rehor.
Okay, thank you very much. And good afternoon. My name is Bryan Rehor, and I'm the Director of Regulatory Affairs at ZestyAI, and I'm pleased to provide comments on behalf of our company regarding the use of cat models in homeowners insurance. ZestyAI's vision is to predict and mitigate the impact of natural disasters on society by harnessing cutting-edge technology such as artificial intelligence. Our ZestyAI product is a new age predictive wildfire risk model built on decades of real loss data, not simulations. And in 2020, it was extensively reviewed as part of an approved rate filing by the California Department of Insurance. It's been leveraged in additional rate filings ever since. We developed this product to enable insurance carriers to make informed decisions about property risk while at the same time providing the transparency to homeowners, allowing them to understand their property's risk factors and take appropriate action to lower the risk. In the same way, we believe that models provide valuable information to help insurers establish appropriate rate levels. We also believe that the public deserves the right to understand these models' inputs and outputs and to be reassured that they accurately assess risk. Given our experience in the model review process and our continued commitment to transparency, we believe that all stakeholders involved, from the industry to policyholders, can benefit from a thorough, structured model review process executed in a timely fashion. We strongly believe that transparency is crucial for a healthy insurance market because it fosters public confidence, trust, compliance, and accountability. When sharing information about models with the CDI, ZestyAI believes that two guiding principles should be followed. First, the provided information should be sufficient to enable public participation in the rate-making process to capture the benefits just mentioned. And second, any information that is not relevant to validating model compliance or that creates the ability for another party to replicate the model should not be made public. Sometimes, in order to complete a thorough model review, sensitive information is required. Typically, modelers are hesitant to subject this information to the public. So therefore, we're advocating for the industry and the CDI to seek alternatives that strike a balance between a thorough model review process and fostering a competitive market to enable innovation. With these principles in mind, we recommend certain elements that should be made public in order to enable an independent review of a model. First, insurance carriers should provide details about how the model was built, including its assumptions, inputs, and general operation. This information is vital for building trust, holding modelers accountable, and enabling an independent review by the CDI or other interested parties. Additionally, modelers should offer auditable solutions that can be verified against real loss data over time. For example, a wildfire model should be continuously validated on new wildfire events in order to ensure it maintains credibility for rate making. This approach ensures accountability, provides feedback to the industry, and allows for a data-driven review by the CDI. Other aspects, such as the raw training and loss data and the explicit computer program developed, are not necessary to create transparency. There is no evidence that their raw disclosure would facilitate a public review of the model due to the sheer complexity of this information. If this information were to be released to the public, it would discourage modelers from conducting business with California carriers and will limit the availability of these valuable tools in a market that greatly needs them. In cases where doubts arise, a third-party actuarial review of the loss data and a technical review of the model by experts can be conducted outside of public scrutiny. While the underlying data or code might not provide additional information to the public or the CDI, their authenticity can be verified through a third-party panel. A summary of the findings can then be released to the public. We believe that these best practices strike a healthy balance between trust, accountability, and the protection of intellectual property. ZestyAI acknowledges the potential benefits of using a model output to support a catastrophe load. However, with the integration of simulation-based models, it begs the question of how the public can actively engage in the process and have a meaningful impact on the determination of their insurance premiums. The fundamental question is, can the public fully participate in the process if one of the inputs shaping a carrier's rate indications is the output of a model rather than real loss data? Currently, in other wildfire states, insurers use wildfire models that rely on simulations known as stochastic models to establish a catastrophe load in their rate indication calculations. While simulation-based models provide valuable insights to help reinsurers assess aggregate level risks, the reliance on unverifiable extreme events can present a challenge in rate making. Striking the right balance between utilizing these models for risk assessment and ensuring fairness in pricing becomes crucial. It was partly for these reasons why, after years of research and development, our own modelers have opted for a model architecture that does not rely on simulations, but rather on actual loss data. Historically, it was challenging for modelers to gain access to the amount of wildfire loss data that was necessary to create a reliable model. With the onset of computer vision enabled by AI and ubiquitous availability of high-resolution satellite and aerial imagery, we have arrived at a new generation of models that are trained on large amounts of actual losses. Such technology was not available decades ago when most of the simulation-based models, which the market is referring to as CAT risk models, originated. We at ZestyAI believe that loss-based models offer greater transparency because they use wildfires that have already occurred to predict the probability of a home being damaged in a future wildfire, which means that they can be validated when new wildfires occur. Consider the 2018 Camp Fire as an example. With industry losses around $10 billion, it was the costliest wildfire in our nation's history. One well-known stochastic model considers this a 1 in 50-year loss. What that means is that there are simulated scenarios that are far worse, but far less frequent than the Camp Fire that are being considered in rate calculations. A problem arises because these rare and extreme events cannot be validated since they may never occur in our lifetimes. It therefore becomes questionable whether homeowners could bear the financial burden of simulated fires that only exist within a computer program. Additionally, insurance carriers have the ability to make adjustments to a stochastic model's output to reflect unknowns such as climate change. While we at ZestyAI are firm believers in climate change and believe that it can have an impact on wildfire risk over the span of decades, we also believe that there are limitations in fully understanding its impact on the world. We don't believe that the public should have to bear the cost of this imperfect understanding. Recognizing that rates are typically set on an annual basis, ZestyAI believes that it's more reasonable to assume that recent average exposure is more likely to resemble next year's conditions. By combining models based on actual loss data with coverage information provided by carriers, the industry can offer insurers a robust average annual loss that serves as a valuable input for developing rate indication templates. ZestyAI's Z-Fire model has already been made available to the public, accompanied by an updated model checklist. Additionally, the latest out-of-sample reports demonstrate the model's ability to track and align with real-world observations. We believe that this level of scrutiny should be applied to all models, regardless of use case, without exception. So, in conclusion, by utilizing models driven by real loss data, the industry can empower both the public and the CDI to gain a comprehensive understanding of insurance rates and the underlying risk factors. We believe that a full model review process that allows sensitive information to be reviewed appropriately can foster a resilient insurance market in California where homeowners have access to transparent and informed rate assessments. By clearly outlining the expectations of a proper model review, the CDI can also facilitate an expedited review process, which is a cornerstone of a healthy insurance market. And by embracing the technology that is now available to us, we can all benefit from accurate rate indications with transparent models that are able to be validated against real scenarios. While we all share substantial challenges in California, we must embrace comprehensive disclosure, ongoing validation, and a shared commitment to managing wildfire risks effectively. Together, we can shape a future where insurance rates are just, inclusive, and reflective of the actual risk that California home and business owners face every day.